What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvidia, the QQQ, and a couple of other tickers. I'm also going to talk about why tomorrow is going to be an interesting day with new trends developing on the charts, and why we saw this big sell-off today after Jerome Powell opened his mouth and after the Fomc meeting. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention an 8.1% APY in uninvested cash. The offer ends in 13 days. Anyways, let's talk about what's happening so far. So today was not only the FOMC day, but it was also my birthday. And I just want to say that being my birthday, I have one wish. I just wish you all happiness and prosperity for the rest of the year and for 2025 and beyond. I really appreciate you guys for watching these videos, and it really means the world to me when you guys just leave nice comments and find value in what I'm trying to do. So I just wanted to say that, but for now the market is in the red and we got this huge sell-off. So I'll be talking about why this happened. But looking at the charts, we're seeing SPY is down 3%, Tesla's down 8%, the QQQ is down 3.6%. The whole market just came down and almost everything is in the red. So why did this happen? We'll be talking about that first before I break down more details. But just know, on my channel, right, what happened in the morning was the market was pushing not too far from all-time highs. Tesla was pumping. I did make a video about how bulls were defending. But then I warned you guys to watch and see our levels. So for instance, if SPY had broken 608, I would be more bullish. If we lost 602, I was expecting a big rug pull. Then we got some data. Okay, the data came out, and I gave you guys a warning about this. I hope you guys saw my video. It's called FOMC Warning. I gave you guys a warning that I was expecting most likely a big rug pull because we started to lose 602. And that was a really good opportunity. If you guys saw that video, you guys would have the exact, almost perfect entry to catch that whole move down. And I predicted that move would come in real time. So you guys could have seen it right over there in that video. If you guys want proof of it, just watch it right now if you don't believe what I'm saying. And I'm just trying to show that my levels do tend to work. They are very, very useful, and I hope you guys find value in them. I am not perfect. I do make mistakes, but there are a lot of times where I am correct, and I just wanted to give myself credit for that, especially because it is my birthday. But anyways, let's talk about the market. So why is the market so bloody red? What is going on? You guys could just see we're red all around. This is known as the Jerome Powell effect. You guys could see how much influence, how much power he has over the markets. He is known for being one of the biggest market makers, and you guys can see exactly why people say that. So what happened? Why did the market sell off like this, and what's happening for tomorrow? Let's talk about some data. So the first thing worth mentioning is that we had the FOMC interest rates decision that came out. The decision basically showed us a 25 basis point cut is what the Fed ended up doing. They cut rates a little bit more, and now things are looking very interesting heading into the next upcoming month. So they gave us the cut, which was fine for the markets. That was decent. But they gave us more data, which is what caused the rug pull. And this is what started things off. So this data came out right here, the FOMC Economic Projections Report. As you can see, the numbers on the left side are higher than the numbers on the right side. And there's a very important reason for that. So for the first year, for the interest rate projection, we're expecting 3.9%. The second year is expecting 3.4%. The third year is expecting 3.1%. And all these numbers are higher than before. What this means is as time progresses, we're expecting the Fed to continue to cut. They're going to continue to cut for sure. It's almost inevitable at this point, but the rates at which they're cutting and the speed at which they cut is going to be greatly dependent on inflation and to what extent inflation rises. Now, if inflation slows down, that's good, but if inflation starts to go up again and becomes more complicated, the Fed's going to take longer to get the rates back down. And that's what is once again scaring the markets. So now the market is projecting that the Fed is going to be slower in their rate cutting cycle for the next upcoming years. That's what the projections are suggesting. That's why now the market is thinking that there's a 93.6% chance the Fed is going to keep rates the same during the January 29th, 2025 FOMC meeting. That is a little bit different from before. Before we were thinking the market would see more cuts. So why is the Fed doing this? Why are they changing their perspective? That's because of this data right over here. Now, Jerome Powell was asked about this many times, and he kept on saying the same old things, but then he did have a little change in his stance a little bit later on. So he basically was saying the economy is doing well. We avoided a recession. He did claim that. He's saying that things are improving, this and that. Inflation's on a downtrend, but if you look at the data year over year, there's been a slight increase in CPI, and he was actually primarily talking about PCE, and he mentioned that there are contractions in the labor market. It is slowing right now, so he was being very honest about the data, and I do appreciate that. However, you have to remember that This is a big change in his tonality compared to before. So that's why the Fed is changing their stance on things. If you look at the CPI data, for instance, I think that this is very sufficient. It's very similar to PCE. What's happening is CPI on the core side without food and energy has been very flat. And this is still above 3%. So it's still kind of hot. And then on top of this, you have all items CPI is on a slight uptrend right here. It went up for the last two reports. So this is where things are becoming more complicated because if CPI continues this trend where it's increasing and increasing, the Fed may have to continue to keep rates the same, and then they have to be a little bit more careful when it comes to cutting rates because of that. So you have to remember that that's very, very important, and this is what caused the market to move the way it did. So Jerome Powell was saying that look, the Fed has to be a little bit more careful. They don't want to cut too fast. They don't want to raise rates too fast. They have to be very careful when things like this are happening, and that's what's making things complicated. He also was asked questions about the state of the economy, what he believes is going to pan out for the future when it comes to changes in geopolitical situations. And he basically mentioned that he can't really comment too much because there could be changes involving foreign policy and tariffs, but they haven't really been enacted yet. So he was trying to play it safe by not giving us too many insights about it. So he was being a little bit more ambiguous at the same time. But here's the main gist of everything. He was basically saying the economy is in a good place, things are improving, this and that. Inflation is once again meeting their target in a way. It will eventually hit the 2% target. He's optimistic about that. But the problem is for the current time, inflation is going up a little bit. And they are projecting that it may increase a bit more going into next year. And that's the reason why the Fed has to be a little bit more careful. That's why they're not cutting rates as fast as before. And that is why the market started to sell off, because now the market's looking at things differently. You see, when the Fed raises rates, it has an effect on the economy. The effect is very delayed. So when the Fed is, instead of like cutting rates faster, if they slow down at doing that, the substantial effects that higher rates have on the economy is going to last a little bit longer. And that could cause a little bit more pain, especially to the labor market. That's the most important reason. And then that's going to be affecting, Americans' jobs, these businesses and such with higher interest rates for longer. And that's the very, very important thing. So the Fed is going to be continuing to cut rates, but they're slowing down the rate at which they're going to be cutting, at least for now. That's what the plan is suggesting. And then that could lead to the rates remaining high for longer, and then that could hurt the economy a little bit more. That's what you have to remember, and that's part of why the stock market started to sell off the way it did. Now, going into tomorrow, okay, there's not really anything too insane coming up. We just have some data and also some earnings. We have Nike announcing earnings and FedEx and BlackBerry after market closes, so keep that in mind. Oh, and one thing I forgot is tomorrow is going to be Thursday, December 19th, 2024. 1 hour before the stock market ends up opening, we have some GDP numbers coming out. So look for GDP growth and such, not to mention initial jobless claims. This may cause some volatility, so please watch for that. That's going to be very important. Then we have a couple of bill auctions at 11:30 a.m. Eastern Standard Time. So we'll see how the market responds to the GDP numbers and some jobs numbers, and we'll see what happens from there. But what is my view for the market for now? What do I think is going to happen? Well, honestly, guys, here's the thing. SPY has this critical support right here between 584 and 585-ish. We came very close to 585. So we came very close to it. So as we get close to this, we should attempt to rebound a little bit. That's the most likely possibility. But here are some key levels, okay? If SPY loses 583 and just can't hold and looks very weak, we could just fill this gap back down to 576. There's a big gap to fill down there. And if we struggle in the low 580s and lose them, I expect 576. If we hold 580 very, very nicely, we should attempt to get back up towards our daily 50 EMA at 590.8. If we break that, I'm looking for an attempt to get back up to 595, maybe a little bit short. And then, if we break that, we're looking for 600 all over again. So what do I think is going to happen? What is my opinion of this? The first thing is that we are at a very, very key support right here. We managed to get close to about 585-ish, which is close to where the support is. So this is where buyers may attempt to defend this. So I think the most likely possibility is because we dropped almost 20 points, or actually more than 20 points, the market is due for a small bounce. So I do favor that a little bit more. But if we do rebound back up towards 590.8, we'll have to see if we get back above that, if we could close above that or not. I also want to call out the possibility that this could be a sign the market's about to pivot, because we've never gone a big, red bar like this for many, many months. if not years on SPY. It's been a long time since we saw such a big red bar in one single day. So this makes me suspect that this could be a sign the market's about to pivot and we may be seeing a small corrective phase. So what that means is SPY could shift its trend, right? The trend used to be higher highs and higher lows, higher high, higher low, higher high, higher low, higher high. But now we broke this low at 602. So that's a sign that we just made a lower low. So does that mean SPY rebounds and makes a lower high, a lower low, lower high, lower low, and we start to trend downwards instead? That's what I mean by a pivot that could be forming. So my suspicion is that the most likely possibility is we rebound for 590.85. If we get above that, we're looking for the mid 590s to be coming. But then just because we rebound into the 590s, it does not mean we're going to last there forever, right? We could still pivot and start turning back down to these key levels. So I think that we might be going back up to 590.8 to 595. And then if that does not hold, we could turn again later on. And eventually we could be on our way down to fill this gap to 576. So that's what I think is the most likely possibility. We should attempt to rebound for 590.8 and eventually 595 if that breaks as the most likely possibility. And then we'll see what happens after that. For ES, as you guys can see, it's getting bought back up a little bit right now in the after hours. We'll have to see if we could hold this support. We managed to get back to the support at 59.30. I want to see if this could get back up to 59.80. If that's the case, we're looking for 6,000. 59.80 to 6,000 could be tested. And just because we rebounded does not mean we're going to be going back to new all-time highs. We could make a lower high here based off of key fib levels. You can even draw it out like this. And then if we make a lower high here and we come back up to about the 6,000 range, we could reject very close to our key fib area and start rejecting and coming back down to some of these low levels. We have a gap down here to fill, for instance, at 58.86. I think there was another one, but I'm not too worried about that for now. So this could be a sign that we're about to see a pivot on ES, might rebound a bit for close to 6,000, if not 59.80. And then we could be looking for rejection again to continue lower, back down towards, below the very, very low 5,900s, right? To potentially fill this gap around 58.80. So look for a rebound towards 59.80 to 6,000, and then potentially a rejection if we fail to hold at those levels. And this could be looking for a sign for a pivot. Now, Nvidia is going to likely attempt to rebound, and I say that because there is potential in it, but we do have a very weak-looking daily candlestick and a head and shoulders-like pattern. So I think tomorrow, Nvidia is going to try to hold above 130, if not 133. It could be trying to get its way back up, but then there might be another rejection, a continuation lower back down to these lows towards 128 and then 125 below that. I also want to call out there's a gap to fill down here at 118 on Nvidia. And there is a weakness right here in terms of its trend, especially after the negative news that came out involving China. So with the Chinese probe news and a lot of weakness in semiconductors right now, this could attempt a rebound for the 130 to 133 area, which is where we tend to see some buyers defended at. But then we could reject just under 136 to 133, which is where our 50 EMA happens to be, to start sinking back down to 128. There's going to be a higher risk of that as the most likely possibility. Just to be safe, I would recommend watching your levels on Nvidia. So watching to see if we could hold above 128 or not, but there is that risk to the downside, that is still pending. For Bitcoin, we are rejecting right here. We're going to be looking for 99,700 as our support. We'll see if that holds. We could test that and see a small rebound for 102,500, but then we could get a rejection. If we lose 99,700, we're at risk of coming back down towards 96,800. Eventually, 91,700 is going to be coming below that. Look for a rebound attempt to the 102,000s before we start dipping lower, and we could be on our way to 99,700 and eventually 96,500 below that. So a rebound and a dip could be coming, so watch for that very, very closely. As far as Tesla goes, we look a little bit weaker here. We got this rejection, but just know that Tesla is known for being very resilient. So I'm hoping we do see a small rebound for at least 450. We'll have to see if we could hold above 450 to 460. I think we might be testing that range again. And then if we reject off 450, we could be on our way down lower. Tesla also has this gap down here to fill around 400. So just know that Tesla's a monster. This thing could run 10%, 15% in a single day. That also shows that it could pull back quite a bit when the pullbacks finally come. But just because we pull back on Tesla does not mean I'm a big bear. This could just be a very temporary pullback before we see a massive, massive amount of upside for the future. Tesla still has that potential, guys, and this is just another buying opportunity this is going to be creating. So look for a rebound tomorrow for 450, if not the 455 zone. And then we'll see if we hold above this. If not, it depends on how well it holds above 460. If we come short and we just push a bit, we could reject again and slowly come down over the next couple of days to fill this gap. There is a risk of this thing kind of switching in terms of its direction. But we need confirmation to see if you get another rejection just to be safe. As far as NQ goes, we could look for a retest of our 20 EMA. We might be attempting to retest 21,685. If we break that, we're looking for 21,800 in that range. We could rebound here, then reject and start dipping back down to 21,250, then eventually 21,000 flat. Look for a rebound for the 21,700 area or above. Then this could start dipping a little bit lower as we're seeing some weakness because of the big red bar. We rarely see such massive red bars on NQ. So this could be a significant turn that could be coming. But I do expect there to be a small rebound tomorrow for this 20 EMA or above. And if we get that rejection, expect a continuation lower after that. For the QQQ, we have this gap to fill down here at around the 509 area. We might attempt to rebound for 520. If we get above that, I'm looking for 525 as a target. But then don't turn overly bullish because this could be a sign this is about to pivot. Like I said about SPY, it's the same thing essentially, right? The trend was we had a low here. We made a higher high, higher low, higher high, higher low, higher high. And now we broke the low right here. We broke the low at 520. So we could be making a lower low here, a lower high, a lower low, a lower high, lower low. That could be a sign this is about to switch directions. So we need confirmation first. So look for an attempt to rebound near 520. If we break down, looking for 525, and if we get a rejection, we're looking for a move back down to fill that gap. So be careful, guys. Look for that rebound right back up here before we see another potential move to the downside. That's going to be the most likely case. As far as Apple goes, Apple's getting rejection right here. We have this resistance around this 250 area. I could see a retest of 248, but this is looking a lot weaker than the markets because we got a delayed reaction basically. So this could be dipping towards 245. If that fails us, I'm looking for 244, then 242 as our targets. Look for a rebound and a dip as the most likely cases, and 244 is likely going to be what we see. For others out there, we have the one and only Netflix stock. Netflix is also showing some weakness right here. We lost our 20 EMA. It might try to get back above 900. We'll have to see if that holds. If we don't hold that, there's going to be a risk of it dipping back down towards a lot lower levels. The first level is going to be right here. The support we happen to have around this 864 area. And if that fails us, I'm looking for essentially 850. So look for a rebound. We might try to reclaim 900, then retest like 900 to 910. And then if we reject it, we're looking for a dip lower to fill some of these imbalances, taking us right back down. MSTR got a big rejection as well. It could try to retest 376. And if we reject it, we're looking for a move back down to 350, followed by 322. So look for a rebound for 370, then a move back down to about 322 is the most likely possibility. The daily on MSTR looks weak, and there's going to be a sign of a lot more weakness from here. For Celsius or CELH, we look weaker on the daily and the 4-hour time frames. I think this will ultimately be coming down to 25.39. However, before it comes down there will be an attempt to rebound for 28 or so. We are kind of oversold. So look for an attempt to get to 28, and if we reject between 28 and 30, we could be on our way back down to 25. So keep that in mind. For Supermicro, we look a little bit weaker on the daily. This is at risk of dipping lower. We have a lot of gaps to fill below, unfortunately. This could attempt to retest 33 before it starts to dip as well. Going to be looking for a test of 31.65. If that fails us, this gap is going to attract it lower towards like 29.5. So I see the potential for this to form like an arc, and this is going to turn more bearish, unfortunately. Palantir got a big rejection. However, it has not lost key support, and it's doing a good job at holding up compared to the markets. So despite this rejection, we could attempt to retest 74 to 75 in that range. And then if we reject off that again, we can't turn too bearish unless we lose 69.3. 69.3 could be retested. We are showing some weakness, but it hasn't lost that for confirmation yet. So could be a rebound and then a rejection to 69.3 that's coming. But we haven't really lost that yet to turn super bearish. Rivian is testing support at around 13.06. If we hold that, we could attempt to get to 13.5, but then if we reject, we're looking for a move back down towards 12.11. I expect 13.5, then a rejection to 12.97 to be coming. Then we could be dipping lower to fill this gap. This gap aligns with the 50 EMA here, which makes me suspect it's going to be a little bit more bearish. So look for a retest of 13.5, maybe a little bit higher, then it could turn back down towards the low 12s, so be careful. SoFi is going to likely attempt to rebound as well, so look for an attempt to get back closer to about this previous resistance or previous support becoming resistance, excuse me, around 15.84 to 16. Look for a rebound right up here, and then it could start turning lower. Still, we have a lot of gaps down here, so it might start filling some of them. So be careful with this. The Russell also happens to have a lot of gaps. If you look at the daily has the 200 EMA here, not to mention this gap down here around 211. So we could rebound for 224 and then reject, and we could be on our way back down for 215, followed by the gap fill for 211. I do anticipate more downside, but we might attempt to rebound first, close to about 222.5 to about 225 right over here. So look for a small rebound before a continuation lower as the most likely case. For AMD, we look more bearish. It's looking very weak right now. We're barely at support here, so we'll have to see buyers defend 121. If they do, we could attempt to get back up to 125, but then we could reject. If we lose that support, we're looking for the next target down here towards 117. So look for a test of about 125-ish to 124. If we reject here, we're going to be dipping back down towards 121 or lower, all the way down to about that 115 area. ARM is looking weaker. I do anticipate more downside. Look for a retest of essentially 140. If it rejects, we could be on our way to much lower levels, so just be careful. But there is going to be a little rebound that's coming. Coin is also looking weaker, especially as we have these gaps to fill. I think this gap is going to fill towards 271, but we might attempt to push for 290 first before it starts coming back down to 271 or below. Don't forget, like I said before, we have the GDP numbers and then initial jobless claims coming out. Amazon has a lot of gaps to fill, so it looks like it could be churning. However, this might attempt to get back up to 225 first. That's previous support becoming resistance, and then we could pivot right back down towards the gap fill for 213. For Meta's rejecting here. We could attempt to retest 604 to 610. It might try to rebound at first, and then if the level does not hold, the daily is showing weakness in terms of momentum. So look for a rebound and then a continuation lower, and we have a gap to fill way down here around 574, so we could eventually start losing support. Look for a retest of 605 or so, and then a dip back down to 585. For Microsoft, we look a little bit more bearish. We could try to retest 444, and then if that fails us, there's another gap to fill down here around 431. So for 444, if that does not hold, we could have basically retested, but then if we turn here, we're going to be turning back down towards 438 and then 433 below that, especially as we have that gap to fill. There's a huge gap to fill on Google all the way down towards 177. We could retest 192 to 193, then reject. And if we lose support over here around this 190 area, we're looking for a dip back down to 186. And if 186 fails us, I'm looking for 183, then the gap fill back down to 177. So there is a risk of downside after a rebound. GameStop pumped and rejected. We're looking for 28.2, then 26.25. AMC looks bearish. We could be dipping towards 4, then 3.8. DJT is looking weaker. If we lose 34.5, we're looking for 31.8. For the VIX, it's breaking out right now. It looks very, very strong right now. We already pumped so much, so we'll see if it pulls back towards 25 or so before it continues. This could signify the market may actually pump just a bit. And then if the VIX continues, it's going to be meaning that the market has more downside coming later on. So just keep that in mind. The 10-year looks a little bit more bullish right now because we're expecting rates to not go down as fast as before. So that tends to be a little bit bearish for the markets. The dollar is also breaking out, which tends to be bearish for the markets. This is looking bullish, which is bearish as well. So could the market rebound? Yes, I think there's a chance it attempts a rebound tomorrow. Hopefully we do see it. SPY could try to get back up to 590 or so. But then there's going to be a risk of us getting a rejection, especially if we have this gap to fill. So just be very careful if that ends up being the case. Look for an attempt to rebound at first, and we'll see how well we hold up and watch the levels just in case, no matter which way we go. Hopefully we see some kind of rebound before we may continue to start dipping lower. But just know there is some risk of more downside looking at the charts and such. Thank you all so much for listening. Have a good rest of your day. I really wish the best for everyone. I'll see you guys very soon on the next one. I'll see you guys tomorrow, and peace out.